Welcome to my new series of I Wish I Knew Before I Started Trading on the Stock Market. This is episode 1, Getting Started. Before we begin, I just need to go over the boring bits and get that done. So, this is not financial advice. I am not a financial professional. I am a popular investor on eToro, and you can check out my information and website on the links in the description below. Just down there. Okay, so I am creating this content for you, so if you want to see more, please hit the like button and subscribe so that I know people are interested and want to see it. Now, before I discovered eToro, I thought the only way to be involved in the market was to either be a stockbroker, in which case you needed to work for a big bank, or you had to call up a broker and buy some stocks with a huge business transaction charge. And being able to buy fractional shares with no fixed fee, for me, was just completely unknown. I just wish I'd known years ago that it was this possible. And obviously, I use eToro, but there are many different trading platforms out there. The reason that I use eToro over the others is that for me, it's just so much easier to use. I have downloaded many other apps, and when it comes to actually trading, many of them are just so overcomplicated. And if you want to do something simple, like just buy a stock, it's not always very clear on how to do that. So I would say the very first thing that you should do is find all the different trading platforms that you can find available in your country and download them. Now, have a play with all of them with the demo accounts so that you can find that one that suits you the most. Make sure that you wait until you put don't put any cash into them until you've had a play with all of them. So play on the demo accounts first. Once you've done that, then you can have a better understanding of which one suits your style best and which one's going to help you with your learning. Personally, I think eToro is the best to get started because not only is it easy to use, but also the social element means that you're able to watch other investors and learn from them as well. Something that is very important is that you do not rush into trading. It's very easy to lose money in the stock market. I mean, just check out my first year. There are always opportunities to make money in the market. And if you rush in, you will make mistakes. Now, mistakes are great to make because they teach you a lot. And you will probably make plenty of them while you're trading. But it's much better if you can learn as many lessons as possible without making too many costly mistakes. Most of the trading platforms have demo accounts. Use these. You will find mixed opinions from YouTube experts. Many of them are going to tell you that pretend money is not the same as real money. And this is very true. Just because you can make money on a demo account, it does not mean you'll be able to do it with real cash. But at the same time, if you can't make money on a demo account, then you'll definitely not be making money with real money. So set yourself a target with a minimum amount of time and a minimum goal before you go live yourself. That is to say, depending on your trading frequency, that you will stay in a demo account for say 3 months, and in that 3 months you will need to at least hit a certain amount of dollars, and that needs to be consistent going through. So if, for example, on month 1 you make $2,000 and then month 2 you lose $1,000, then you're not ready. You need to reset the timer, start again with a new strategy, have another look at the way that you're trading and work out what's going wrong. And I'll have another video about trading strategy later in this series, but using that time in your demo account, plenty of people can join up to trading, start trading on the market, and day 1 they've made $1,000. By day 5 they're up 200%, and then by the end of the month they might still be up really well. But holding that consistency is what causes the problem with most people. So now I'm going to contradict myself. I've just told you not to rush in and not to jump in unprepared. But now I'm also going to say the best time to get into the market or a trade is always today. Now, I'll have another video in this series explaining why you don't need to try and time the market. But if you're like me and you're chomping at the bit and you have $200 or $2,000 or even $20,000 and you want to start making money from that right away, this is what you need to do to start off with, is find somewhere safe to put it. And I don't mean to buy one particular stock. I mean to buy either an ETF or copy a popular investor on eToro, or do something that you feel comfortable with, or even a combination of those, because at the end of the day, having some skin in the game will stop those itchy feet, and it'll allow you to practice in the demo account yourself without risking your own capital. If you are using eToro either for your real cash or just for your demo account, then you can also watch the popular investors on there, see how they trade, what they are saying, and where they are putting their money. See if you agree with them, and then watch to see if they were right, and or if you were right, if you disagreed with them. But try to avoid the temptation to just jump in. Wait until you've got that experience with your demo account first. Trading the market is a very emotional activity. Not only do you need to know when to get in and when to get out and when to hold, but you also need the confidence in your ability to predict this. You will often hear about traders who say things like, I was just down the street and the guy who polished my shoes said I should buy X stock, so I've decided to open a short. And the reason for this is because when the average person decides to do something, they are normally the last to do it. So if, for example, everyone is buying a stock, then there's no new buyers, which will cause the stock price to drop. People will start to panic sell. So as they are in negative equity already, and this will then push the price lower. Then as the price drops, everyone that is panicking is going to start selling their stock as well. And that goes all the way down to the people that are right at the bottom, who they're the ones that have got that confidence in the stock, and it hits them, and those people, even though they have the confidence in the stock, they're then starting to panic because they're seeing the market fall, and they'll close as well. And once they close, there's then no one left selling. So the price starts to climb back up again. And knowing if an asset is going to keep dropping in value is very difficult, and it depends on a whole multitude of things. And you can only know this with time and experience in the market. So that's the problem, is obviously you've got the people at the bottom, and if you're one of those people that you've got the confidence in the market, you've got the confidence in the company, but you don't have the experience, you're going to be one of those people that closed your position right at the bottom of the market. So, in summary of this, learn the lessons from your demo account, from YouTube, from websites, from books, and other investors, while having some cash in the game in safer investments so that you can still watch the market without really expensive lessons. Be aware there is no safe investment. You could always lose money. It is more that you are statistically less likely to lose your money if you invest in an ETF or a popular investor rather than one specific stock or one selection of stocks. So there we have it. That's the end of episode 1. By all means, please leave any comments in the section below. Let me know what you thought of the video and if it was any help to you. And see you in episode 2.